Okay, welcome everybody to today's webinar. It's about the big debt bubble burst. It's a trader's dream. We have the perspective that this burst is an opportunity for traders and investors. So the big question is, if it bursts, well, which country is the first? Is it the US? Well, here on the left, we have the US federal debt, and we all know that it's piling up at an exponential rate. But the debt is one thing. The other thing, the more important thing, is the yield that has to be paid on this debt. And well, we all know that we had this zero rate interest environment for many years through quantitative easing, etc. Since the last great financial crisis, 2008. Well, that has brought down the interests quite significantly, even to the zero level. Well, it's easy to make a debt, right, when you don't pay any yield on it. But that's obviously not sustainable forever. And we can already see how that has changed quite a bit. Actually, that started with the Ukraine war, February 2022. We can see it in the interest rate futures charts that at that moment we see a rise in the yields. And that is seen here. Well, it went from 0 to over 4, right? And it actually made the news because, I mean, it's a very easy calculation, right? Debt times the interest yields, if both go up, well, this is the leverage, right? The interest, if the interests go up, if they double from 2 to 4, well, you have to pay twice as much of interest payments. And that made the news that now in the US has to pay more than 1 trillion of interest payments. Well, that is huge. And as well here, that is an exponential chart, right? The Economist has then written that the budget was up. Forget about the shutdown. Well, the shutdown is the left part, right? America's real fiscal worry is rising bond yields. And that is absolutely right. Well, let's have a look at the interest payments. And this is it, basically. This is the blue chart. In 2002, if you compare 2002 to 2004, well, the interest payments on government bonds, they have more than doubled. It basically went up 130%. Well, that is huge. Where does it come from? Well, the main driver is the increase in interest yields, right? So it's more debt and it is higher yields. Well, the interesting question is, where does the bust start? Is it in the US or are there other countries that have bigger problems? And indeed, yes, there are other countries. Well, let's have a look at Japan. What we see here is the gross debt per GDP. So how big is this stockpile of debt in comparison to the strength of the economy? What we see in the US, it's above 100. Well, that is high. In the European Union, the standard should be 60%. So that's well above 100 here. But Japan, well, we are above 200%. That is huge, right? And it is a very big economy. And when we look here, what Reuters wrote, it wrote Japan's descent into its debt trap. So we're already talking here about a debt trap, right? It's difficult to get out of the trap, as we all know. Beginning in the 1990s here with the burst of a real estate bubble, this problem was further compounded by high demand for stimulus packages, which has caused Japan's debt to continually pile up. And this is the result, what we see here. Both went up, but Japan is even worse. Well, what impact does it have on the charts? Because we are traders and investors, right? So this is the US yen chart. And we actually see that, well, the US yen chart, well, if you look at the chart, it basically means when it goes up, that the yen weakens and the dollar strengthens. And that's what we have seen here, right? Over the last couple of years, that the yen has weakened a lot. And that had serious consequences because the Bank of Japan, they stepped in to intervene at this important level, the 100, no, a little bit lower, I think it was the 148 level. It's the same level back then during the Asian financial crisis. You might remember that was in 98, I think. They have intervened here. And for more than 20 years, they did not intervene, right? For more than 2 decades. So this is the first time they came up again, intervened, then again and again and again. Well, we can actually see it on the charts when they intervene. They first tried to keep it at that level, and then they couldn't hold it. Then they tried to keep it at the 150 level, and they're still trying to hammer it down, right? But it doesn't seem really to work. Why? Well, because there are a lot of forces, right, that are actually having an impact for the yen to be weak. Could we see that in advance? Well, we trade the charts, right? I mean, fundamentals is interesting in the news, but basically we focus on the charts. And what we saw very early on is this pattern here. When was that? Well, that was in the 20s, 21, and that executed a buy signal for the US yen chart. This is an S1 busted pattern. When we talk about a pattern, well, it's all this. It's a consolidation move up, and it's this multi-bar pattern on a horizontal line. That's system one busted pattern. So we already saw when it triggered an entry here that there was that there were problems on the horizon, and it actually did what it should, right? It reproduced this momentum move, and it scared the Bank of Japan that the yen could lose even more value. And our target is way up here. So will the central bank be successful with that? Well, we see it in history. The Swiss National Bank, they tried it as well, and they had to let it go, the peg to the euro. So central bank interventions, they don't last for very long. And when they let it go, well, we'll see a quick move higher, right? So that's an opportunity. That is an opportunity we see here. And in general, the yen is the weakest currency we trade, and you can trade the yen not only against the US but many other currencies, right? And they all look weak for the yen. Well, let's have a look now here. Let's focus in on Japan. They kept interest yields artificially low with an ultra loose policy. Well, that's how it's called, right? An ultra loose policy of the Bank of Japan. And we saw that since the great financial crisis, 2008, the yields went down. They even went negative. Well, it's easy, right, to take on debt and to use it for government spending to revive the economy. Well, if you have negative interest rates, well, they could sustain that for a couple of years, but then something happened, and I think it was in Reuters. Japan to lift assumed rate for debt servicing for the first time in 17 years. So that was down here. They were actually forced. They could not hold it anymore with all the measures they did. And what measures did they do? Cutting rates down to zero, well, zero interest rate policy. Implementing quantitative easing means that the state prints money, and with that money, they buy up government bonds, so creating the buy side, right? And expanding its asset purchasing program. So they basically stopped that, right? And the Ministry of Finance in Japan, the latest estimate, the cost of financing debt could shoot up as the central bank leans toward exiting crisis mode stimulus. Well, if the Ministry of Finance says that, has to admit that, well, that means a lot, right? And since then, well, we've seen how the yields went up a lot. Currently, they're at 1.4%, so they're up here. And you can imagine if the yields go from 0 to 0.5% to 1 to 1.5, that makes a huge difference. Or we can see it with the ratings, right? With the sovereign credit ratings of Japan, it has worsened and worsened. And of the G7 countries, it's actually the second worst rating we find, right? Worse is only Japan. Worse is only Italy. But Italy is part of the Eurozone, right? If they have problems similar to Greece, well, they will be helped out. Well, Japan, that's not the case. So there's some trouble, right, on the horizon. So how did we? Okay, well, this is a chart from a webinar I held in 2022, a couple of years back. Well, this is when this pattern actually triggered, and well, you know the result, right? Well, it was based on this S1 pattern, and the yen is overall strong, but especially against the strong currencies, right? So a strong currency, for example, is the Swiss franc. And if you combine a very weak currency, the yen, with a very strong one, well, you get very big moves. So this moved from within a couple of years only, this moved by 64%. Well, that is a huge move in the currency market. And you have to think, I mean, these are not stocks, right? I mean, currencies you trade on margin with a leverage of, let's say, 25%. So a 64% increase, and you trade that with margin. Well, that is a huge increase. So what you see as well here with the Forex chart is that is very smooth, right? Nicely following the moving averages. The small black one is the 8 exponential moving average, and the thicker blue one is the 21 moving average. Well, here again, it was a busted pattern, system one. And well, that's what we always say, that the patterns tell the story. Whatever the news are, and the politicians say, well, we actually see it before they even open the mouth. We can see it in the charts, right? What is going to happen? Well, with this bubble burst going on, we're actually going to see big currency shifts, shifting from the weak currencies, for example, the yen, into the strong currencies, the Swissy, and that allows for a lot of opportunities, right? Now, we've got a couple of you don't know about the way we are trading and how we're looking at the markets patterns, right? Visual price action patterns. I'm just posting you in the chat an article that talks about that. It's a bit like hunting for fish. Now, the big currency shifts, this will actually be the next webinar in a few weeks from now. And I'm posting you as well a link, an article about the big currency shifts that are on the horizon. When we say big shifts, well, we're talking about big moves within a longer time horizon. We're talking about basically 10 years. Over the next 10 years, the markets should move quite a bit because of the chaos and trouble ahead. So this is the big currency shifts. 4 strongest currencies, 4 weakest currencies, and if you combine strong with weak, well, you get great trending charts. But that's for the next webinar. So big picture outlook, chaos on the horizon, and opportunities for the trader and investor. So what is the big picture outlook for the next 10 years? Well, it's about the debt bubble. And the debt bubble is the same thing around the world. It's a global thing, right? And well, this is the mother of all bubbles. Well, the question is, who will be first? Is it Japan? Well, if it is Japan, it's a huge economy. Well, I think Europe is next. And finally it is the US, but we're going to have a look at that. So when interest rates increase, just the logic behind it. When interest rates increase, governments will get into difficulties to service their interest payments. I guess that's clear to everybody. Well, this will intensify the underlying fear that government papers are not 100% safe anymore. Is it clear? So if a government cannot pay its debt, well, it comes into difficulties and it might actually fail, right? Countries can become bankrupt. We know that from the great financial crisis. Well, it was close for something like this happening, right? With Greece, for example. And when that happens, when governments become a bust, well, then it's a sovereign debt crisis. What we typically see with sovereign debt crisis, well, it starts with one country, well, the weakest, right? And then it starts to continue and build momentum and basically infect other countries. And the same will happen then with those. So the money knows that, and it will try to find a safe harbor. Well, but there is no real safe harbor to hide, which is the problem, right? And the opportunity. So funds will slowly reallocate from government papers if the fear is there that governments cannot service their debt, or they're selling these government bonds and they're getting into other things. Well, that's then typically hard assets. And as the bubble, the government debt bubble, as it starts to lose pressure, well, this is a process that goes very slowly and steadily. It's not happening in one quick bust, right? It's not like a stock market, a crash. This is slowly and steady and brutal as well. So it is like bursting a balloon with a needle. However, the air gets out over long periods, not a flash crash, right? Well, that offers opportunities for a longer period of time, 10 years. That's our horizon. Funds will try to hide in safer currencies, moving from the weak into the stronger ones, achieved from the yen into the Swiss yen and the Swiss franc. Only small amounts of liquid funds coming from government papers. That is such a big market, such a big bubble, the government debt bubble, that only if like 1%, 5% moves out of it and diversifies into other asset classes, it will create new bubbles in other asset classes. For example, currencies will bubble as the Swiss franc bubbled. Metals, you know it from gold. We are close to 3,000. It's in bubble mode. Energies will bubble. Stocks, right? Money will try a place that is sufficient liquid and relatively safe. If everything is unsafe, well, what people will do is, well, they will basically diversify and allocate to whatever they think is safe and brings performance, right? And that includes as well cryptocurrencies, a very small market. It's only the market size of silver, very small, very easy to create bubbles, and real estate as well. So people will be scared and actually make them undecided and nervous, because government papers was always perceived to be the safest asset class to invest in. But staying in those papers, well, will scare them too, right? So there will be, you just think about that, bubbles are coming up in other asset classes. There will be a lot of fear as well, of missing out. So we'll have a scenario of a lot of fear and a lot of euphoria, and people will basically feel trapped. If they don't know what's going on, they will freeze, right? They will be fearful. They don't know what to do. And on the other side, they see these bubbles popping up, and it creates a lot of FOMO. So that's a typical trap, right? A trapped situation. And we know very well what traps can produce on charts. Well, big moves, right? So people like retail people and institutions, they will feel trapped. And we come later to what institutions there are and what opportunities they have to go into, because it's limited. Right? They cannot invest in anything. So basically, trading Forex, futures and cryptos will offer great opportunities to come. Well, we here in the trading community, we are fully flexible with trading different currencies, different asset classes, and different time frames. The high ones, the medium ones, and the very low time frames. At whatever time of the day, I don't know if everybody knows, but the Forex and the futures market and the crypto market, it's a 24-hour day, nearly 24-hour. And cryptos, even they trade 365 days per year. So new bubbles will be created, but not at the same time. They will come up at different times. And that offers the opportunity that you can trade one bubble. Well, currently it's gold. I believe that silver is better now because silver has not yet moved into bubble mode. So as a trader, the idea is basically to chase and hunt the bubbles and get out with a good exit algorithm well before it's over. Right? If you want to know how a bubble look like, well, look at the platinum chart. It bubbled a few years back, it bubbled, and this is the blueprint chart you foresee for other charts too. So over time, funds will move from one currency or one asset class to another. This is the opportunity. So this is the ideal market scenario for traders and investors who are flexible. And it's basically a trader's dream. And now, for the next 10 years, is the time to benefit from. So it's about getting mentally prepared to strive financially. These are times of chaos, and it's not that easy, right, to keep a cool-headed mind during these times. But the first requirement is, well, you need to understand the big picture, and when it unfolds, well, you know what to do. So when I held a similar presentation last year, I got a number of nasty emails. People really got their buttons got triggered, and I just wanted to show that the bubble burst will really start slowly and then develop momentum, working its way from the edges to the core, and that takes 10 years. So it will start with the weakest country. I don't know which one it will be. Is it Argentina? It looked like for many years. I don't know. Will it be Turkey or Japan? But it will eat its way forward, right? Well, who's the last man standing? What do you think? If that happens, if one country falls after the other and there's chaos on the streets, who's the last country standing? That might surprise a lot of people. What is your guess?
Switzerland, yeah.
Yeah. Could be Switzerland. What else? Switzerland is a small country, right? Very small. Russia, well, we'll see. India, US, yeah. Well, Sean, I know you know.
Maybe even China.
Exactly, yeah. It's the US. The US is the last man standing. But that might surprise many people because the debt is so big, right? But it goes, I mean, the US is the world economic power. If there's chaos, right? I mean, people will always go to the strongest. And as well, they've got the world currency. It's a very liquid and deep market. I mean, serious funds, they cannot move into the Swiss franc, right? Because it's just a small country. Well, they will move into the US dollar. And you will actually see that when that unfolds, well, the USA is the last man standing, right? So you don't need to fear that this bubble will explode from within. It does not start with the US, because many people think that, right? It starts from the outside and then it eats its way slowly forward. This is it, basically. So what happens is the flights to quality, right? Investors, well, they get a bit scared whether the return of their funds. So they will try, obviously, they will try to get into a better investment, and they're looking for a safe harbor. So this will trigger the big currency shifts, and it will as well trigger, and that's a term we coined, the big. Well, that is actually known. This term we coined the currency shift, the big commodity super cycle, and we will see. Well, gold is not at its end, right? And silver, we see the target for silver above 200 from currently 30. So we'll see big moves. Well, that's opportunities. So let's think about who are the market participants. Well, it's investors and traders like us, but the serious money was with the institutions, right? So in the institutions, for example, pension funds, they heavily invest in government bonds. Well, it's part of their guidelines, right? But when they understand that government bonds are not safe anymore, they will try to find a way out, right? And diversify and put their money into other asset classes, sovereign funds, sovereign state funds, central banks. They hold two government papers, right? Family offices, endowments, etc. Insurance companies. I work for the biggest insurance company, European insurance company in Germany, Allianz. And they, well, for their life insurance product, well, they have invested in government bonds, right? But when that's not possible anymore, because it might not come back, the money, well, they will go and do other things. And they already started doing it. So what could they do? Well, they could move in other currencies, right? They could diversify in metals, for example, gold, in energies, in stocks, in real estate, in venture capital. They do all these things. And nowadays, even in cryptos, because cryptos become now an investment product for institutions. Since we have the cash ETF, right? So now these institutions, they can invest into an ETF and get direct exposure to Bitcoin and Ethereum. That was not possible before because it was a pure retail market. So these other markets, they will go up, right? As the debt bubble gets smaller and bursts little by little, well, these other small markets, they will start to bubble, right? At different times. Any questions so far? It's really important. It's not intended to scare you, right? It's more about the opportunity, and that takes a long time. Okay, what are the top 3 trends for 2025? Well, we see the New Zealand dollar. The dollar is one of the strongest currencies, and the Kiwi is one of the weak ones. Well, this is a weekly chart, and we see here, well, that's our system 2 pattern. We've got a momentum move, and we've got a consolidation, that's system 2, and that triggered. So for 2025, we see that this might drop quite a bit into this big number, the 0.5 level. Well, we'll see how that goes. This is silver, right? I mentioned it. Silver, that's a monthly chart. Here, this is the pandemic fear low, and from here, this is an overall S1 pattern. What's clustered with patterns. Another S1 pattern. So the more patterns you get, the more energy is built into the system, and you can expect a huge move coming out of it. So for this year, 2025, well, our target is around 45 for silver. There would be a big increase, 50% increase. And then finally, well, it should break the consolidation high, which is up here. Well, that's then for the years to come. So there's a lot of catching up to do with gold. Gold has already made a new high, right? Compared to its 2011 high. Well, silver is way below, right? So there's catching up opportunity here. And cryptocurrencies, just an example, that's not investment advice, right? By the way, not at all. That's just for educational purposes. So this is the crypto coin Binance BNB chart, monthly chart, daily chart. What we see here, again, it's an S1 pattern. If we see a pattern, a momentum move and a pattern, well, we think that this is a coin that will at least last for the time we're in it. And as well on the daily chart, as well, it has executed an S1 pattern entry. So it looks pretty good with BNB to move. This has potential to 100-fold, right, from its current level. It can go from $700 a coin to $700,000 a coin. How do we know? How do we define the target? Well, it's a measured move from before. That's an exponential chart, and we're basically expecting that it's duplicating the same move it did. It did a 100-fold here, right? So that's not something that is not possible, and it can do that again. Right? It's a half-mast flag. Just posting you if that's of interest to you, a YouTube video where I'm a bit more specific about these 3 opportunities, and as well I'm reviewing the top 3 trends from last year and how they did at beginning of the year. So I've just posted the YouTube video. Right, so how to trade the burst when it accelerates and it lasts over the next 10 years. So what do we do? Well, the recommendation is to become an active trader and active Become an active trader and active investor. So we have already seen spectacular moves in Forex futures and the crypto markets. Such move will get bigger, letting most people stunned, especially those who do not understand what is going on, right? Whatever bubble there is, it's always confusing, right? The majority of people think it's crazy, that cannot be, it's much too high, it will go down tomorrow. Well, a bubble, you never know when it bursts, right? You want to trade a bubble, an exponential move. That's a bubble, an exponential move on the chart. Well, you want to trade it till it ends by having a really good exit algorithm to reap and bring home the profits. So volatility will be high. This will only intensify over the years to come as the big picture unfolds. So that has, you see this spiral of sovereign debt. Well, this will intensify over the years. So increased uncertainty coupled with excess liquidity means more volatility in the markets, and volatility is a trader's best friend. That's good news. So we follow the patterns. It's actually much easier if you only rely on the charts and the patterns, because the patterns they tell the story, and we just trade the trends, right? We identify a trend, we find a pattern that gives us a low risk idea. We know what the target is, where we get in, clear entry, clear stop loss, and that's a low risk idea. So we do not focus on news or commentaries, but the charts. It makes trading and investing much easier. And I just recommend that you navigate the financial markets. No, that if you navigate the financial markets very nicely if you know what is going on. You might not be of the exactly same beliefs of that big picture, but if it unfolds, well, you will remember, right? And at least you will not get frozen, and you will not like ask yourself what is going on. So basically, you need to diversify, and you want to capitalize on these huge trend moves by trading different asset classes in different time frames. So we are very flexible with time frames, even from the second charts, from the 1 minute charts to 15, 60 to 40 daily, weekly, monthly. These patterns are fractal, and they come up in whatever time frame and whatever symbol. So if you trade what you see, the pattern and the trend, while managing your risk, then actually you just execute, right? And your mental state, if you focus on these things, well, is good, right? And then you can thrive financially, capitalizing on this chaos and these bubbles forming. Now, this is a global thing, and we're looking at a scenario that the world has never experienced before, right? So far, these scenarios we saw, well, were more local, right? Well, suddenly everything became global, a bit like the corona pandemic, a global thing, right? That has shaken the world. Well, we'll see something similar, just this time in the finance markets. So get ready and capitalize on these unique trading opportunities unfolding over this coming decade. So it's important because these are like times of chaos. You don't need to be perfect as a trader. It's really important because many people will be completely confused, right? You only need to be slightly better than your counterpart, and being aware of this big picture as it unfolds is already a huge edge that puts you ahead of most traders. So it's about enjoying this huge and incredible ride to come. It's not something that is going to start in the future. It has already started, right? Gold, we got a gold signal in July 2019, and since then it basically doubled. And we see other asset classes, cryptos, right? Bitcoin mined its first coin in January 2009. If the great financial crisis was not there, I think cryptos would have come probably years later. right? So this has started many years ago, but we're starting slowly and it's gaining momentum. So yeah, it's good to stay safe, right? And it's important to stay in a good mental state while things unfold. Basically, at the end of the webinar, next webinar will be about the big currency shifts, which is an interesting topic as well.